Good morning, everyone, and welcome to another edition of the Vetiva Breakfast Meeting, brought to you by Vetiva Capital Management in partnership with Transfer Africa Reports. It's Wednesday, the 8th of September, and today we'll be hearing from our equity trader and our fixed income trader, after which we'll get some headlines from our partners at Transfer Africa Reports. Before we begin, I'd like to remind everyone that this meeting is being recorded, and the recording may be shared with third-party listeners. Well, we're also streaming live on Facebook. And today, after our presenters have spoken, we'll take questions. If we're unable to take any of your questions due to time constraints, please feel free to email us at research@vetiva.com. So we'll start with a rundown of some international equity markets from our global equity desk. Good morning, Cynthia.
Good morning, Joshua, and good morning to everyone. I'll be doing a review of the yesterday's performance of some equities markets across West Africa, and I'll be starting with BRVM. The composite index continued its upward trend, closing up 19 basis points yesterday. With rising demand in Nesai Bank Cordova, the stock was able to top the gainers chart, consolidating on Monday's 2% gain. The market was also lifted by new timers, that stocks with prices that have declined in recent sessions. It adds to Sucre, Seco, and CFA Motors all advancing. With a couple of impressive half-year results to boost activity level, the market saw a 96% improvement in both volume and turnover, as ETI recorded the highest volume of traded shares yesterday. Going into today, with the appearance of a stronger buy-side interest, we expect the market to close positive. Over in Ghana, composite index closed up 5 basis points due to the 2.11% upside in Societe Generale. The stock ended yesterday's session as the only gainer, and it has been trading flat at 95 pesos since July 12. Despite being one of the most traded stock on the exchange, a significant drop in the number of MTN shares traded yesterday affected activity level, as we saw volume and turnover declined by 68% and 47% respectively. Going into today, we expect the market to close slightly positive on back of sustained interest in number of stocks. However, we do not rule out the possibility of sell down in recent gainers. And like we've always mentioned, for any of our listeners looking at exposure at these markets, they can reach out to us at dealing@vetiva.com or to our sales team at sales@vetiva.com, and we would get back to them. Over in the Nigerian equities market, the market traded on a muted note as the all-share index remained unchanged. We saw sell down in the banking names like Wema, UBA, and GTCO, as these overshadowed gains in the consumer goods space, which closed up 52 basis points on the back of continued buy interest in honey flour. The stock closed up 6.67% yesterday. FTN cocoa was also up by about 4%. Mirroring the ASI was the industrial goods index, as this also closed flat. For activity level, this improved significantly as we saw volume and turnover increase by 68 and 107% respectively, largely on the back of trades in the banking space. Tier 1 names like Access, FBN, Zenith, and UBA accounted for about 65% of total turnover yesterday. Going into today, so we've been seeing we have seen half-year corporate earnings in the Tier 1 space, fueling sentiment in the market, and we expect investors to ride on this wave in the short term, while still being cautious of the broader markets. In other news, Access Bank has released an update on its share reconstruction exercise from a nominal share value of 50 kobo to 2 naira. And in order to effect this, shares of the company will be temporarily suspended from trading tomorrow. So the shareholders register can be updated with the reconstructed shares. So basically this exercise is just to reduce the number of outstanding shares and increase your share price proportionately without affecting the value of shares held by each shareholder. And we've seen some insurance company they've done this exercise. Lasaco did theirs earlier this year. Yeah, that'll be all from my end. Thank you.
Thank you very much, Cynthia. Next, we'll hear from Omar again on the fixed income and currency markets. Good morning, Omar again.
Good morning, everybody. I'm supported by the OMO repayment of about 113 billion that came into the system yesterday. System liquidity improved marginally to open at 212.7 billion positive, coming from the 170 billion positive that was recorded on Monday. As a result, money market rate declined by an average of 113 basis points, as OBB and overnight rate closed at 7% and 7.25% respectively. For today, we expect money market to trade at similar levels, barring any significant shock to system liquidity. The parallel market remained stable yesterday to trade at 532 naira to $1, while the earning window opened at 411.07 naira to $1. The highest trade that was recorded yesterday was 412.95 naira to $1, while the closing rate was 410.67 naira to $1. Brent lost about 2 cents today, while WTI gained about 11 cents to open at 71.67 and $68.46 per barrel, respectively. The TB's market traded on a muted note yesterday, as market players decided to stay on the sidelines and trade cautiously ahead of the NTB auction that is holding today. At the auction, the DMO is offering a total of 138.16 billion across the 91, 182, and 364 day papers. On the 91 day, the total amount on offer is 5.06 billion. We expect it to maintain at 2.5%. On the 182 days, the total amount on offer is 23.45 billion. We also expect the marginal rate on that end to maintain at 3.5%. On the 364 day, the total amount on offer there is 109.65 billion. We expect the marginal rate to close between 6.5% and 6.8%, given that the secondary market is currently trading around 6.5 levels. And from what we have seen in past auctions, players usually bid aggressively at the auction, way lower than where secondary market is currently trading at. In the last auction, I think the lowest bid was around 5.8% on the 1 year paper. So we believe that given that the DMO is also not very aggressive as regard cutting marginal rates, we have seen them take way more than what they had on offer in previous sessions, but they still end up cutting rates on the 1 year paper. So we also expect this to play out in this particular auction. So we are sticking with the 6.5 to 6.8 band. So for the OMO market yesterday, we saw that trade on the quiet note also, like the TV's market, basically because of the weak demand in that space. Trades were majorly consummated on the 21st December 2021 and the 22nd February 2022 maturities, with average benchmark rates remaining unchanged at 5.99%. For the bonds market, weak current sentiment persisted yesterday as rates inched up across the benchmark curve during the start of the trading session, in the absence of any significant demand in the market. However, we witnessed some trickles of demand on the 2036 and the 2050 maturities towards the close of the trading session, with rates moderating slightly. Trades were majorly consummated along the mid to long end of the benchmark curve, especially on the 2036, 2045, and the 2049 maturities, while average benchmark rate rose slightly by about 1 basis point to close yesterday at 11.56%. The Eurobond market traded on a very active note yesterday, with sell-off seen across the sovereigns. The most actively traded sovereigns yesterday were the Nigeria 2047 and the 2049. We, however, witnessed some buy-side activities in the corporate space, with the EcoBank and Fidelity Eurobond being the most sought after maturities. For today, we expect the weak current sentiment in the bonds market to persist as players continue to cherry pick attractive offers across the benchmark curve, where we expect the TVs market to trade on a muted note as market participants shift their attention to the NTB auction that is holding today. That'll be all for fixed income. Thank you.
Thank you very much, Omar, again. Next, we'll hear from our partners at Frontier Africa Reports. Justina will be taking us through some of the headlines across Africa. Good morning, Justina.
Good morning, everyone. So we're starting here in Southern African region, where South Africa's economy grew 1.2% in the second quarter, driven by sectors like communications, agriculture, and mining sectors. Also in South Africa, the largest grocery retailer, Shoprite Holdings, reported annual earnings up to 20.3% and says it hopes to sell its assets in Madagascar and Uganda this year. And that means it hopes to conclude sales this financial year. They will now be focusing on 10 core countries to sustain profitability. In Zimbabwe, British American Tobacco Limited reported 63% increase in half-year revenue to 538.3 million Zimbabwean dollars. This is driven by increased sales volume, price increases implemented during the current period, and the export of cut rag tobacco. The board also says it will not be declaring an interim dividend for the period to allow for reinvestment in its operations. In East Africa, Kenya's current account deficits widened to 5.4% in 12 months to July, compared to 4.9% the previous period last year. In Mauritius, Tana Furniture has bid to buy a 55.9% stake in Kenya's Furniture Palace International Limited. Also now we go to North Africa, where Egyptian Finance Minister says the country will enter the sovereign sukuk market in 2022. He explains that investor demand for the first offering of green international bonds reflects that confidence in the local economy is actually strong. E-Finance is likely to offer a stake in the Egyptian exchange in October this year. E-Finance is a digital payment platform that operates in Egypt. Morocco's central bank is expected to keep its rate steady at 1.5% in the second half of 2021. And that's according to forecast by Attijari Global Research. In Tunisia, inflation fell slightly to 6.2% in August after a sharp rise recorded last month from 5.7% in June to 6.4% in July. According to the country's statistics office, the slight drop recorded in August is due to the slowing down in the rate of price increases between July and August this year, compared to the same period last year. In West Africa and Nigeria, Nigerian automotive tech company AutoCheck announced the acquisition of Cheki Kenya and Uganda from Ringia One Africa Media for an undisclosed amount. Last year, the company bought both Nigeria and Ghana businesses from Cheki. In Cote d'Ivoire, NSIA Bank has announced a half-year net profit of 10.03 billion CFA franc, soaring from 255% compared to the 2.8 billion recorded the previous year. And I think that's all we have here from Frontier Africa Reports. Thank you for listening.
Thank you very much, Justina. We'll now come to the Q&A portion. If you have any questions and you would like to speak, you can raise your hand and you'll be allowed to speak. Otherwise, you can leave a question in the Q&A box or the chat box. And if you're joining us on Facebook, you can also leave a comment and we'll answer your question. We already have 2 questions. The first one is from BC Sanda, and it is to the fixed income analyst. It says, please, what is the direction of Naira exchange rates and when will the effect of IMF, I guess, SDR and the ongoing Eurobond issuance be felt? And then the second question is to the equity analyst. saying that Mansard will be carrying out share reconstruction, and what is the best benefit of this to shareholders? So we'll start with the first question to the fixed income analyst.
Good morning. Thank you so much for that question. So I remember when the CBN banned sale of FS to BDCs during the morning meeting, we made it very clear that the outlook for Naira is going to be, Naira is going to depreciate further in the parallel market, given what we saw in the parallel market in last time that something like this happened. But then again, CBN came and started doing a lot of things to try to keep the Naira at reasonable levels. They started instructing banks to sell FS to customers, to open FS centers at major branches just to cater for FS demand of customers. And what that was able to do was to suppress the decline in the interim. So we didn't really see that the depreciation happen as we expected, but then again, we have seen that the depreciation is most likely inevitable as the Naira has depreciated from the 509 levels to the current 532 Naira to a dollar that's currently trading at. The SDRO came in on August, the last week of August, I think 28th of August. So that has not really been able to cushion the depreciation that we have been seeing in the Naira. The Eurobond is the date of the issuance has been shifted. It was initially going to be in September, but the DMO shifted it to the 11th of October. Hopefully, when this comes in, we expect it to be able to, serve as some buffer to help keep the Naira at some reasonable levels. And also, we believe that with the current improvement in oil prices is currently trading at around $70 to $70 per barrel. And given that we are currently be seeing slight uptick in demand despite the spread of the Delta variant of COVID-19, we also believe that would help to support the Naira at this reasonable level. So we believe that once the Eurobond issuance takes place with the support of that liquidity, the CBN will be properly or will be more harmed to protect the Naira. I believe that answers your question.
Sorry, just to chip in some comments to that question as well. Thank you, Omorige. So basically, between August and now, we've seen the reserves go by about $1 billion from 33.5 thereabouts to about 34.45. Sorry, $1 million. Pardon me. So pretty much we've seen the gradual impact of increase in oil prices on the reserves, and we hope that continues in the near term. To the IMF borrowing, the IMF had approved, but it's left to the countries to draw as well. We've not seen the impact because it appears, and things are largely muted about that. It appears we haven't drawn. I mean, there'll be requirements like we had noted at some point as well from the IMF as to what each country needs to do exactly. But the details about that are still very much sketchy. So it's not clear what Nigeria has done about drawing on that currently. So we'll continue to make findings on that and provide feedback once we have some clarity. But with respect to the Eurobond, as Omorige noted, in October, we're expecting that the government will tap. And so all these have not come into shape. But we believe strongly that, once the country is able to tap the Eurobond market, that is direct and straight through, the moment the issuance closes, we will see strong direct impact on reserves depending on how much we're able to tap. And by the time that happens, the CBN might have some stronger war chest as to defending or supporting the naira, as the case may be. But the question would remain that banning the BDCs, supply to the BDCs, which remains a very major source of how the parallel market rates are impacted. Will that be reversed will be the question, or how will CBN be able to filter money, into different corners where there's need for FX that would ultimately impact the trading place of the naira. But that remains to be seen. But again, would expect that depending on how strong the Eurobond issuance is, there will be the effect of speculators trying to get out of positions, and that will definitely create some positive buzz also in the interim. So we'll continue to watch that space, but the impact will most likely, we'll start to see maybe some helpful impact going into October when the DMO finally taps the market, and that would impact the reserves. I see there's a third question very quickly as to our expectations for the 364-day auction. We had noted that between 6.5 and 6.8, but we see a case where, again, there are different factors. We see where the fact that there's still a build-up from the last auction because they sold so much to everybody, and that's why we've seen rates, maintaining strongly around the 6.6, 6.7 levels, as against the strong dip we would see from previous auctions. So today that might reduce the appetite at the auction. So two things: if DMO walks away, we see a downside where things close somewhere around the 6.5, 6.55. If they're unable to walk away, which is another signal, and they take a whole lot of funds, we'll see things between 6.8 and obviously in a stronger case scenario, 6.95. So our band will be between the 6.5 and 6.95 levels for today's one-year paper. I think that covers all the FI questions in there. Thank you.
Thank you very much, Dapo. For the equity question, we'll go to Cynthia.
Yes.
Please go ahead, Cynthia.
Yes. Oh, okay. So to answer the question, like I mentioned earlier, it's just a technical exercise whereby they reduce the number of outstanding shares and they increase the share price proportionately, meaning that each shareholder's value would remain unchanged. And so there isn't any benefit to that. However, it's important to note that this would could affect the liquidity, as the number of shares in the open markets would be reduced. Yes, thank you.
Thank you very much, Cynthia. It appears that we have no further questions, which means we have reached the end of today's meeting. Thank you very much for joining us. We hope that you join us again tomorrow for another edition of the Vetiva Breakfast Meeting. Do enjoy the rest of your day. Good morning.